Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Fresh turmoil for traders. President Trump denies he intends to fire Fed Chair Jerome Powell after floating the idea in a meeting with Republicans. Trump also says more than 150 countries will soon get letters imposing tariff rates of 10 to 15% a day after sealing a deal with Indonesia. Plus, the G20 finance ministers meeting is underway in South Africa with trade sharply in focus. SARB governor Lesetja Kganyago told us that tariffs have made policymaking more difficult. Well, it's just gone 8 a.m. across the Emirates. I'm Jemana Bersetchi in Dubai. Some fireworks last night. If you were up, obviously, in the Middle East, it was a little later in the evening. But so much speculation now around the future of Fed Chair Jerome Powell and whether he can actually cling on, even though later on President Trump did seem to say that he's not planning on firing him. And that it is, quote, highly unlikely. That did not stop these markets from seeing a bit of a roller coaster end towards the session. But S&P did manage to eke out a positive session by the end of the day yesterday, so ending in the green. Less because of Powell and more because of those strong bank earnings that have been coming through, the likes of Goldman, Morgan Stanley posting record trading results. So that is giving these markets a bit of a boost. So this morning, S&P futures are down 0.2%. European markets look like they're going to be opening up today in positive territory, up 0.6%. Yesterday, we did see a pullback, namely on back of ASML, the chip machine or the lithography machine maker ended the session down around 10% after guiding to lower sales for next year. So that set a bit of a cloud in the semiconductor industry yesterday. USD this morning up 0.2%, though, of course, when those initial headlines came out about the possibility of Powell being fired, you saw the dollar dip, recovering this morning, and then 10-year yields up at 4.47%. So we're flattish, but one of the big phenomena that's occurring in yield space is that curve steepening. So we're going to talk more about that in just a short while. But let's go back to that top story. Never a dull moment. President Trump has denied that he is seeking to remove Fed Chair Jerome Powell after raising the idea in a closed-door meeting with lawmakers.
He's a terrible Fed chair. I was surprised he was appointed. I was surprised, frankly, that Biden put him in and extended him, but they did. So, no, we're not planning on doing anything. We're very concerned.
Let's get the market reaction with Bloomberg MLive strategist Mary Nicola. Well, roller coaster session yesterday, or at least a part of the session, until Trump came out to say that it's highly unlikely that he's going to fire Jerome Powell now. Walk us through how the market reacted to the possibility that the Fed chair was going to be forcibly removed from his position.
Yeah, I think there was so much volatility after those news, and it's going to continue. As long as you're toying with the idea of potentially removing the Fed chair, and the poly market, for example, is pricing in roughly 20% odds of that happening. But if you continue to do it, you're going to see volatility. A lot of what you're going to see is an impact on the U.S. dollar, which we saw overnight, and you're going to see dollar weakness. And then, of course, you're going to see curve steepening. What happens is you're going to lose credibility in Fed monetary policy. That independence that the Fed has is going to lose its significance. Remember, it's such a cornerstone of U.S. policy. And now when you're blurring fiscal and monetary policy, that becomes a threat. And we've heard from a lot of the bank CEOs last night about how damaging this could be to the market's credibility, to the U.S. credibility, if those lines are really blurred.
Yeah, it was really interesting to hear the likes of JP Morgan, Jamie Dimon actually referencing it specifically and saying that things could get complicated if you start interfering with Fed policy. One thing else that I wanted to flag as well is the curve. The U.S. curve has been steepening, 230s back to levels not seen in 3 years. What do we point that down to, Mary?
Yeah, I think there's a confluence of factors because this is not only what we're seeing in the U.S., but we're also seeing it in Japan. And I think curve steepness has become more of a theme in a lot of global markets, and especially on the G10 side. That has a lot to do with fiscal credibility. It has to do with concerns about inflation. We're seeing stagflationary-like risks, whether it's in Japan, in the UK, in the US, and that obviously weighs on the bond markets. Then, of course, in the likes of Japan, the US, the UK, the central banks are unwinding their balance sheets. So it's all a confluence of factors coming at the same time. And of course, there's concerns about fiscal spending. So we're heading into, for example, in Japan with elections coming up, and there's concern about even more fiscal spending adding to already their very large debt pile. And of course, we just had the U.S. Passage of the Big Beautiful Bill, and that also complicates the outlook for the fiscal side. And then, for example, for the UK, you also have the augmented pressure that Chancellor Reeves has to manage. So there is more than one thing that's actually complicating the outlook. And then for the U.S., you're just adding on top of it what we're seeing with Fed Chair Powell and the potential loss of credibility for the Fed. So there's a number of factors that are likely to persist that is just going to worsen the steepness in the curve.
Yeah, appears to be the case. Bloomberg's Mary Nicola, thank you so much for breaking down for us some of these market moves. Let's continue the conversation and get into how some of these Asian markets have been reacting to all of the news that is coming out of the White House. Avril Hong is in our Singapore studio. Avril, walk us through what's going on this morning.
Yeah, Jumana, I mean, we're seeing these added risks for Asia markets, given how we could see the potential undermining of the Fed credibility, adding another layer to markets that are already grappling with tariff uncertainty. That being said, similar to what we saw in U.S. equities, Asia stocks are not really showing any major repricing, given this all being speculation, and they're actually struggling for direction across the major indices. It's worth noting, though, there are some idiosyncratic plays, a couple of stocks that we are keeping watch on, including SK Hynix, that's down today after a downgrade to neutral by Goldman, citing increased competition for the Nvidia supplier. And then for the likes of S7&I, the convenience store operator in Japan, of course, it has seen its buyout offer from Couche-Tard getting withdrawn, so that's not very helpful. The stock there is down. And overall, we also have the idea of potentially the dollar being the biggest loser amid the potential undermining of Fed credibility. Might be helpful for Asia currencies, save for the Japanese yen that has seen a very bearish view sort of emerging, some saying 150 against the greenback is possible now. As we head into the upper house election over the weekend, and there are some polls that are showing that the ruling coalition might not keep its majority. Jumana.
Yeah, and those weak export numbers from Japan as well. I noted earlier that their exports to the U.S. have dropped by more than 10%, so quite significant. It's beginning to show up. Avril, thank you so much. Now, South Africa's central bank governor, Lesetja Kganyago, is signaling confidence that inflation will remain within target for the next 2 years, despite uncertainty stemming from U.S. tariffs.
For all of us who are exporting to the country that imposes tariffs, there is an impact on output. And in the case of South Africa, the biggest impact had come through the automotive industry and the agricultural sector. The issue about tariffs also raises important issues. We are having to grapple with what would this mean for the outlook of the U.S. economy and the posture that the Fed might take in terms of monetary policy and what it would mean to global financing conditions. And the problem is that there are so many moving parts, it is not clear where we would end up. Uncertainty abound.
Our chief Africa correspondent, Jennifer Zabazajja, is covering the G20 finance meeting in Ballito, South Africa, and joins us now. The governor is one of the most experienced central bankers around the world. And I thought it was really interesting in the interview that he conducted with you, Jen, that even he has a whole bunch of uncertainty about the outlook based on the tariffs, the different pronouncements coming through from the White House. It's a difficult time to be a central banker. Did you learn anything about the direction of policy in South Africa?
Right. And Jumana, Governor Kganyago said that all of the events that he's gone to, he pointed to Sintra, the spring meetings, really over the past few months. He said that the consistency among central bankers and his peers has been this idea of uncertainty. And so really we wanted to get an idea of where then does he see any sort of confidence. And especially if you take a look at the inflation outlook here in South Africa, we've seen inflation at least for the past 8 consecutive months. It's been near or below the target for the central bank. And so the question is, what does this mean for the forecast? And he was at least confident in saying that he does believe that inflation has moderated, but he's unsure really what it all looks like what it's all going to look like going next, simply because of some of the points that he just pointed out there, because it could, in fact, affect the U.S. in a way that we're not seeing yet. It could affect countries like South Africa that are going to be facing steeper tariffs in just a few weeks. Potentially China deflation is also going to affect the countries. And so, it really is a continuing theme that a number of central bankers globally, but also here at the G20, many of which are going to and are continuing to face the threat of tariffs just over the next few weeks, are trying to sort of balance out how do they continue to address some of the complications that they have within their own economies, while also trying to read through a lot of the uncertainties that still persist, given the confusing rhetoric coming out of the White House.
Yeah. And of course, no doubt, there's going to be a lot of talk about trade and perhaps the reconfiguration of the world trade construct. What else is on the agenda for today, Jen?
Yeah. Right. So this is today is the official first of the 2-day meetings that are happening here in Zimbabwe in South Africa. We will see a number of finance chiefs officially descending here on the grounds, as well as central bankers. And they're going to be talking about some of those issues that we pointed out there. It is going to be tariff threats and trade that are going to be on the agenda, but they do want to focus on some issues that don't always get the spotlight. Namely, I'm talking about cross-border payments, which we did talk to Kganyago about, also catastrophe insurance, productivity, and labor. And really what he wanted to stress to me about yesterday was that South Africa went into this G20 presidency as the first African nation to host the G20, really with a number of priorities. And I asked him, given this new Trump White House, have they really had to sort of sidestep a number of those priorities? And he said, as somebody who is a member of the finance track within the G20 grouping, they haven't changed their priorities here. The question, though, is will they be able to come up with a communique, an agreed upon communique among members at the end of this? We spoke yesterday, Jumana, on the show, and we did. I mentioned that the DG of the National Treasury here in South Africa does believe that there is optimism that they will see a communique. Yesterday, when I spoke to Kganyago, he said whether there's a communique or not, at least they're all talking about some of the issues that are facing the global economies and their own economies.
Jen, really good to have you on. Jen Zabazajja, our chief Africa correspondent in Ballito, South Africa. And coming up, Wall Street banks report record revenue hauls as they reap the benefits of volatile tariff-fueled trading. The details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Goldman Sachs stock traders have posted the largest quarterly revenue haul in Wall Street history, raking in $4.3 billion on volatility sparked by the Trump administration's trade war. Across the top 5 U.S. banks, first-half trading revenues surged by $10 billion year over year. Let's get more with Bloomberg Intelligence senior analyst Matt Ingram. So second set of results coming through yesterday, both Goldman and Morgan Stanley surprising to the upside, both on trading but also on investment banking and the language around investment banking. What is driving the strength?
G'day, Jemana. Look, it's been an amazing reporting period. Volatility obviously is the key word. As we said, Goldman has set the gold standard for equities and they've had a really strong quarter. Fixed income and currencies as well have been extremely strong. It hasn't just been Trump tariffs. There's also been concern about how much central banks will cut. There's obviously been some fairly terrible stuff happening in the Middle East. All of that points to one thing: clients want to get rid of volatility risk, and that means more trading activity.
Yeah. Interesting also that on M&A, GS reporting volumes that were 30% higher year on year, and Morgan Stanley saying the pipeline is the strongest it's been in the next 5 to 10 years. So that's also significant. But earlier this week, we heard from the Citi CEO, Jane Fraser. She was saying that volatility has now become a feature, not a bug, of the New World Order. Do you agree with your own analysis? Do you think this is going to continue to be a tailwind for some of these U.S. banks?
Yeah, look, I guess post the financial crisis, the banks significantly de-risked their own on-account trading books. They're all about volatility and client activity now. And so, as Goldman said about a year ago, they're very much more focused on meeting the client needs. They're a client-centric bank, and that feeds through to helping clients reduce that volatility impact on their own books. So it's very hard to see that volatility going away. We're back one way 1 week, we're one way the other week on the tariffs. We're still having uncertainty on interest rates and currencies. So it's pointing to more volatility and more trading activity for the banks.
Yeah, good thing, I guess, for the senior bankers and all of these banks. At Bloomberg Intelligence senior analyst Matt Ingram, thank you so much. Well, coming up, President Trump dialing down his confrontational tone with China. More on what this means a bit later in the show. But when we come back, we're going to talk more about the Powell headlines. This is Bloomberg. Hi, Deepak. Can you hear me?
Good morning. Yes, I can hear you.
Hi. Fantastic.
Hi.
Thank you for thank you for mobilizing so quickly. We appreciate it.
Thank you so much. No, it's great. It happens.
We get to talk about Powell, the craziness of Powell.
Yes.
Welcome back to Horizons Middle East and Africa. I'm Johanna Versace in Dubai. Now let's get back to our top story on Trump walking back, firing Powell, and the market reaction. Happy to say that Deepak Mehra, chief economist at Commercial Bank of Dubai, joins us now. Deepak, right after those headlines came out, we saw a quite pronounced market reaction. We saw the dollar drop almost 1%. You saw the treasury curve steepen. You saw stock markets decline almost 1% as well. Do you think if it actually does happen, if President Trump does pull the trigger, then this would be the catalyst for a sustained risk-off move, and you could see that weakness in the USD, the steepness of the curve, and the decline in stock markets continuing?
Good morning, Jemana. If this bizarre thing were to happen, really, it would be unprecedented, and it would expose us to risks or scenarios which we've never seen before. And I think that's the nightmare scenario that the market is getting worried about. Not that I think it will happen. It's very unlikely to happen. But if it were to happen, then precisely the reaction that we saw yesterday could only get accentuated.
Yeah, but the thing is, it's out there. So President Trump has floated the possibility now. And no matter what happens, there are going to continue to be questions swirling around the Fed Chair Jerome Powell's future. Have we got to the point now where investors are seriously going to start questioning the independence of the decision-making out of the Fed?
I think we have to put things into perspective. We know how Trump operates. So Trump is volatile. He could say things which could rake up these issues. But then we saw Scott Bessent come very clearly yesterday, or was it day before yesterday on Bloomberg television, and clarifying that Jerome Powell will be very much in his position till May 2026. In fact, he said after May 2026, Jerome Powell should step down from being a governor after he's no longer the chair. So indirectly referring to the fact that things should be fine. It's just the US president's style that he's putting pressure on the Fed to go easy on rates. And he doesn't know what else to do about this other than threaten him about his job.
Well, he said yesterday in the press conference, I'd like to see a low interest guy. That's a quote. That's what he said. So I wonder whether markets will move away from the short-term questions of what happens over the next few weeks, months, to the fact and the real possibility that you are going to have a very dovish Fed chair succeed Jerome Powell, in which case that might be a good thing for stock markets.
Yeah, absolutely. But that is going to happen only in May 2026. So till then, we have to see how Jerome Powell and the committee operate. It's very likely they'll be data dependent. Let's not forget, Jerome Powell himself is a dove. He's the guy who delivered 100 basis points of rate cuts towards the end of last year when inflation was nowhere close to the target. But he is a dove himself. He's just waiting for opportunity to cut. So I don't think the market should be too worried at this stage about this confusion that happened yesterday. It was some old news that got leaked out. But luckily, Trump clarified it just after that. So I don't think this thing should have any more repercussions after this.
Yeah, Deepak, final quick question for you. The inflation data that's come through this week, is there enough to suggest that tariffs are beginning to hit the final consumer?
Not to the extent that we thought, and not to the extent that the market or the Fed was worried about. It seems, yes, tariffs are impacting the core goods area, but then there are other areas that are softening. And so there is a set-off between the two, and it's not going to be as severe as the market believes. Personally, I think tariffs are taxes. They are deflationary by nature. And even if they show up, it is a one-time adjustment which should not lead to any persistent worries.
Deepak, really good to have you with us this morning on the show. Such an important 24 hours to digest for market price action. Deepak Mehra, Chief Economist, Commercial Bank of Dubai. Thank you very much. All right, speaking of the markets, let's just get a recheck of how things are faring this morning. Some stabilization coming through. We have S&P futures down 0.2%, even though they managed to eke a gain yesterday, but less so about Trump and the Powell comments, and more driven by what we've been getting out of those U.S. banks, with very, very strong results coming through from Morgan Stanley and Goldman Sachs, both on trading activity and, surprisingly, on investment banking activity as well. European markets today seem like they're going to be opening up in the green, up 0.6%, though there, of course, they were pulled down yesterday by ASML. The chip maker was down about 10% in trade, so that was a bit of a drag for the semiconductor space. All right, we're going to move on and talk about geopolitics. Coming up, Israel has attacked Syria's military headquarters in Damascus. We speak to Ryan Bohl, Senior Middle East and North Africa Analyst at RANE, on what this means for the security situation in the region next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Fresh turmoil for traders. President Trump denies he intends to fire Fed Chair Jerome Powell after floating the idea at a meeting with Republicans. Trump also says more than 150 countries will soon get letters imposing tariff rates of 10 to 15% a day after sealing a deal with Indonesia. Plus, the G20 finance ministers meeting is underway in South Africa, with trade sharply in focus. The SARB governor, Lesetja Kganyago, tells us tariffs have made policymaking more difficult. Well, it has just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. If you're just tuning in now, it was quite the roller coaster ride for stock markets and broad financial markets yesterday. A report emerged late evening in Dubai yesterday that Trump was preparing a letter to fire the Fed Chair Jerome Powell. Later on, about an hour later, he was asked in a press conference if that was actually going to happen. He said it's, quote, highly unlikely. So still a lot of speculation around the Fed Chair Jerome Powell's future. What we did see, though, was we managed to get small gains out of Wall Street. This morning, S&P futures down 0.2%, though, of course, we're right in the heart of earnings season. Those U.S. banks that reported yesterday, Morgan Stanley, Goldman Sachs, reporting very, very strong results on both trading and investment banking. So that sort of set the tone from a micro perspective. European markets look like they're going to open up in the green today, up 0.6%. And then we've got the USD recovering. At one point yesterday, after those headlines came through, the dollar was about 1% weaker. This morning, we are trading up 0.2% firmer. So again, traders trying to digest what this all means, not just for policymaking, but also the direction of monetary policy as well. Because after the CPI prints this week, remember, traders were quick to price out the probability of imminent rate cuts. And then 10-year yields we have at 4.47 today. The theme is one of curve steepening. Both 210s and 230s in the U.S. continue their steepening trend. All right, let's push on and check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. What was the reaction in Asian markets overnight to all of this news and the headlines around the Fed Chair Jerome Powell's future?
Yeah, Jumana, I think you saw how Asia stocks were really struggling for direction amid the concerns about the Fed's independence getting undermined. Overall, this is adding to a layer of uncertainty for markets that have already been grappling with the unknown surrounding tariffs. Trump talking about these tariff letters to 150 countries. I thought I'd just highlight what we're seeing in Japan as well, because certainly there, where tariff negotiations have not been resolved, all this coming ahead of an upper house election over the weekend, where the ruling coalition, according to some polls, might lose its majority. And then you had data that you mentioned earlier, Japan exports falling, adding to a risk of a technical recession. Now, another layer that investors are watching out for is how Japan had been a sort of area for optimism for M&A activity. And now with Couche-Tard pulling out of its bid to buy 7&I, the convenience store operator, the stock there plunging, that just adds to the sense that Japan stocks really need to see more results. Otherwise, investors are going to continue losing their patience, and we could see the fading of upward momentum. Aside from that, highlighting what we're seeing on dollar yen as well, the Japanese currency has been coming under pressure ahead of the upper house election over the weekend. Some say 150 against the greenback is the next level to watch out for. Jumana.
Avril, thank you so much. And just quickly, let me bring you some earnings that are coming through. Nordea Bank, second quarter net interest income has come in at 1.8 billion. Just a touch below estimates of 1.81 billion. 2Q net recoveries, 21 million. The estimated provisions were 53.4, so slightly lower on the provisions side of things. But net interest income number in line. And this continues with the slew of bank earnings that have started to come out, both from U.S. and obviously now from the European continent and Norway, too. Switching over to geopolitics, Istanbul Mayor Ekrem Imamoglu has been sentenced to nearly 2 years in prison after he was convicted of threatening Istanbul's chief prosecutor. But this sentence falls short of banning Imamoglu from politics, which would have dealt a serious blow to President Recep Tayyip Erdogan's biggest political rival. Bloomberg's Middle East and North Africa managing editor Onur Ant joins us right now. So walk us through the reaction to this ruling. We know that he's been held in detention for it's been a couple of months now.
Almost 4 months.
Yeah, so what has been the reaction in Turkey?
Well, this is not the end of problems for Imamoglu. Yes, yesterday's conviction did not result in the kind of sentence that would automatically bar him from politics and prevent him from running for office against possibly Erdogan or one of his successors in the future. But Imamoglu still faces a set of challenges, including the main investigation or the court case where he is accused of various things, including corruption and terrorism allegations that might still result in the kind of sentence that could bar him from politics. Not to mention the fact that his university diploma was revoked just a few months ago by Turkish authorities, and that is having a university diploma is a prerequisite for Imamoglu to be able to eligible to run for office. So clearly, this is not the end of issues that Imamoglu is facing. But yes, yesterday's conviction was less severe than some expected, and hence the muted market reaction yesterday.
It is quite a politically charged period for President Erdogan. Not only the Imamoglu case is ongoing and crackdowns with other mayors around the country too. Last week we spoke about PKK and putting down their arms, and then of course you have the situation in Syria flaring up as well. And we know that Turkey has been a big backer of the Sharia government. How is Turkey and President Erdogan viewing the latest developments in Syria with the Israeli attacks on Damascus recently?
Well, obviously, it's a great cause for great concern for Turkey. As you said, it has been a main supporter of al-Sharia and his government in Syria, and we have seen that the Foreign Minister Hakan Fidan yesterday, just at the height of Israeli attacks against Syria, including those that were taking place in Damascus, Hakan Fidan, who was the intelligence chief in Turkey and ran the country's Syria file for over a decade during the civil war, intervened or tried to intervene through Tom Barrack, U.S. Special Envoy for Syria, to get the attacks to a halt, because they think Israeli interventions in Syria or strikes in Syria have the potential to undermine and destabilize the government of al-Sharia, which obviously Turkey is very much opposed to.
Yeah. All right, let's further the conversation. Onur Ant, Bloomberg's managing editor for Middle East and North Africa. Thank you. Well, just to build on what we were saying, Israel has struck Syria's military headquarters in Damascus and moved troops to the border to prevent attacks against the Syrian Druze community. Israeli forces have stepped up operations in Syria since the deadly fighting between the Druze, Bedouin groups and Syrian troops in the southern area of Suwaida. Israel is accusing the new Syrian government of President Ahmed al-Sharaa of directing fighting against the Druze, a minority group the Jewish state has pledged to protect. Let's now bring in Ryan Bohl, senior Middle East and North Africa analyst at RANE. Ryan, what is Israel trying to achieve here? Just opening up yet another front in a series of conflicts that have flared up in the region since October the 7th.
Yes, and it can seem like it's coming out of nowhere from the Israeli side of things. But what the Israelis are trying to do is create an informal buffer state in southern Syria, because strategically what they want is Syria to essentially be either a very weak state or a broken state, so that it is unable to threaten Israel, as the previous Syrian government was able to do in 1967, 73, and for many decades there. So what they want is Syria to be divided up. And one of the leverage points they've got is to try to exploit existing ethnic and religious divisions like there are between the Sunnis and the Druze. And of course, Israel has plenty of Druze citizens of its own, including in the Golan Heights. And it believes that it can use that sort of social connection there to create this proxy state in southern Syria.
Yeah. But at the same time, the U.S. has been talking about potential normalization between Israel and Syria. That there's a bit of cognitive dissonance to see that on one hand, they want to push for normalization, but on the other hand, you see these strikes taking place, even military strikes against the Syrian capital, Damascus. Are those two objectives incompatible?
I think they are. I think it's paradoxical that the Americans are trying to push for a détente and even more distant normalization between the Sharia government and Israel, at the same time as giving some support to Israel as it conducts airstrikes on that very government. It suggests quite strongly that American strategy in Syria is still in flux after the fall of Bashar al-Assad. After all, America's main interests in Syria were counterterrorism and then, of course, stabilizing the security situation that was being caused by the civil war, but not taking a side in the civil war. Well, now the civil war is over, and I think a lot of American policymakers are still debating what's the best way forward. Now, the Israelis believe a weak Syria under whoever it might be is the best option for them going forward. But from the American perspective, if we have another weak Syria, it means that there will be opportunities for extremists like the Islamic State and Al-Qaeda and potentially new options to emerge.
Well, here's the thing, right? When Ahmed Shara became interim president, one of the big challenges he was going to face was uniting the country and managing to exercise some control over those militant groups, in addition to making feel like the minorities are welcome in this country. And what we have seen over the course of the last couple of months is sectarian violence has flared up, and he's demonstrated difficulty at controlling those militants. Do you think Syria is on track for another civil war?
I think that we're still in something, I wouldn't call it a honeymoon period, but the civil war with Assad was so devastating that I think most of the factions within Syria simply don't have the appetite, let alone the manpower, to conduct a sustained second phase of a civil war. But instead, what we may be looking towards, especially under this Israeli military campaign, is a fracturing of Syria into informal spheres of influence, Turkish in the north, Israeli in the south, and potentially Gulf Arab and other zones of the country. And that may be more of the Libya model. That is, that it is a country in which it is divided, but it isn't strong enough to carry out yet another devastating civil war.
Yeah, and the whole world has sort of moved on away from the Iran-Israel war, the 12-day war. But, of course, that was a huge seminal event in the region. What do you see happening on that front? Do you actually believe that Iran will come back to the nuclear deal discussions and that there is still a real possibility of them agreeing to some of the more onerous concessions that the U.S. are asking for?
I think right now, given Iran's current leadership and their experience in the so-called 12-day war, suggests that that's quite unlikely. The Iranians have had a rally around the flag effect. So their government has enjoyed a legitimacy boost for the first time in many years. And their government really doesn't have any incentives to go back to the negotiating table to offer concessions to what it views as aggressors. And so their incentive instead is to once more return to their traditional strategy of buying time, dragging things out, and seeing if they can find ways to escape sanctions through alternative means rather than through concessions to the United States or to the Israelis.
Okay, so if Iran doesn't come to the negotiating table, could we see the U.S. strike their nuclear facilities once again?
More likely we'd see the Israelis make that move first, just like we saw last month. But that would be something that the Americans would be informed of beforehand and would likely be on board with. And the reality is that Iran's nuclear program was not destroyed. It was set back and damaged. To what extent is not clear. But if Israel's overarching goal is to see the end of that nuclear program, it has essentially committed itself to an open-ended military campaign where it must continue those strikes over months or even years to try to degrade and destroy it and see if they can outlast the current Iranian leadership that is so committed to that program.
Ryan, really good to get you on the show. Ryan Bohl, Senior Middle East and North Africa Analyst at RANE. Thank you so much. Now for a look at some of the other stories we're following. Israeli Prime Minister Benjamin Netanyahu's coalition has lost its ruling majority after a second ultra-Orthodox party quit his government. Shas has quit over a bill watering down a decades-long religious exemption from military service. Netanyahu is now left with just 50 seats in parliament, short of a minimum 61-seat majority that's needed. The decision won't trigger an immediate collapse of the government or an early election. UK Foreign Secretary David Lammy has suggested he's considering imposing sanctions on Israel's Defense Minister Israel Katz. That's over his proposal to move Palestinians in Gaza to a so-called humanitarian city in Rafah. Katz had reportedly said they would be screened to ensure they were not Hamas operatives and that once inside would not be allowed to leave. Lammy condemned the plan, saying, quote, no defense minister should be talking about effectively holding people unable to leave. It's the latest sign of growing tensions between European governments and Benjamin Netanyahu's administration. Now, Bloomberg has learned that Elon Musk's XAI is in talks to lease data center capacity from a pair of Saudi companies. Sources say potential partners include Humane, a Saudi-backed company offering several gigawatts of capacity. And the talks are part of an effort to expand in regions offering cheap energy and political goodwill. Coming up, President Trump softens his tone with China as he seeks to secure a summit with Xi Jinping. The latest on the U.S.-China trade next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Bersachi in Dubai. Bloomberg has learned that President Trump is dialing down his confrontational tone with China in an effort to secure a summit with Xi Jinping and a trade deal with Beijing. For more, let's bring in Bloomberg's Mackenzie Hawkins. Great piece that you've co-written that's up on the terminal. It came out last night, an exclusive, suggesting that President Trump does indeed want to tone it down a little bit when it comes to all of the salvos being directed towards China. Why the change in tone, Mackenzie?
So Trump is really eager to meet with his Chinese counterpart. He also wants a trade deal, and he wants to be able to tout wins for his negotiating strategy and this sort of blitz of tariffs that he's threatening on the entire world. And so what we've seen, particularly this week, but also in recent months, is a sort of change in tone from the more hawkish rhetoric of Trump's campaign. The president said Tuesday that he will be fighting China in a, quote, very friendly fashion.
There's one line in the article that caught my attention, saying Trump is now focused on cutting purchase deals with Beijing and celebrating quick wins instead of addressing root causes of the trade imbalances. Why, again, do you think he's shifted towards more maybe superficial measures at rewiring the global trade system as opposed to it dealing with some of those root causes?
I mean, the root causes are difficult to deal with, and we saw Trump take this tack in his first administration as well, trying to get the Chinese government and Chinese companies to agree to purchase quantities of U.S. goods that could, in the short term, alleviate some of his concerns about the trade deficit with China. But we could see also trade numbers come in for the total of this year that could change the president's thinking and rhetoric. For the first half of 2025, China posted a record trade surplus because it has booming exports.
Yeah, that's the irony of the situation. Bloomberg's Mackenzie Hawkins, thank you so much for joining our show. And coming up, the United Arab Emirates share sales is expected to gain momentum, while Saudi Arabia is heading into the second half with a more cautious tone. The details next. This is Bloomberg. Welcome back to Horizons. I'm Johanna Bersachi in Dubai. The United Arab Emirates is seeing renewed momentum in equity capital markets heading into the second half of 2025. But Saudi Arabian firms eyeing share sales face investor caution over valuations. Joining me now with the story is Laura Garna-Cuesta, Bloomberg's Middle East equity capital markets reporter. Let's just start with the outlook in the UAE. Surprisingly resilient, I would say.
Yeah, so 6 months ago, you and I were talking about Talabat, Lulu Retail, these muted debuts really dented sentiment at the start of the year. And there's not been an easy year. We've had Ramadan in March, April tariffs, June conflict, so it's not been easy to find a window. However, there's been a good deal in the UAE, so the Dubai residential REIT, that's really catalyzed sentiment. And I think going into the post-summer window, there's a few things cooking. So we've got Alec, the contractor who started doing investor meetings, looking to issue after the summer. We've also got quite a bit of follow-on activity in the UAE. We've had actually more follow-on activity than IPOs so far this year. And we're probably going to get a big follow-on from Mubadala.
When you say follow-on, as in secondary listings?
Exactly.
Yeah.
So essentially Mubadala in this case is looking to sell out of their due holding, and that's likely to come after the summer as well. So we've got a few deals. The contrast, I think, is with Saudi, as you mentioned in the intro. That's been the busiest venue for Middle East IPOs so far this year. But we've seen a different shift there with investors.
Why is that the case in Saudi Arabia?
So I think it's several things. We've seen several muted debuts. Flynas was the most high-profile one. SMC, obviously, there's a lot of turbulence in the market. But in Saudi specifically, we've seen the stock exchange perform a bit more poorly because of oil prices, particularly. So investors are questioning, what this this means for the economy, government spending. And so there's a bit more caution from investors, I think, going into the second half of the year. There's definitely a pipeline, and we'll still see the diversification that we've been seeing. But
what about international investor interest? One of the lines in your article caught my attention saying rising Gulf representation in emerging market indices. What impact is that having?
So I think now investors internationally have to pay more attention to the region because it is rising as part of the index, but they're still quite underweight. One of my interviewees in the article said that perhaps if valuations in Saudi calm down as part of this sort of reset, it might actually, because they're traditionally quite high compared to like even global emerging markets. So potentially this reset could actually attract more.
Yeah. Laura, thank you so much. That was Laura Gardner-Cuesta, Bloomberg's Middle East Equity Capital Markets reporter. Thank you. And a look at equity futures, digesting the news that the Fed Chair Jerome Powell lives on another day, so he's not losing his job yet, though it seemed like he was about to last night. S&P futures down 15 basis points now. European markets look like they're going to be opening up in the green. Let's switch over, though. I want to show you the Treasuries market boards, namely because we are continuing to see upward pressure being exerted on yields. So 10-year yields are up almost 2 basis points a day. The 30-year is above 5% now, 5.03. We're keeping a close eye on the steepness of the curve, both 2s, 10s, 2s, 30s getting as steep to levels not seen in a couple of years. And that is really a reflection of the extra term premium, fiscal premium that investors are pricing in to the long end part of the U.S. curve. And also is a reflection perhaps of inflation expectations. Remember, we've had a bunch of CPI data hit this week. CPI, the core, we spoke about it yesterday, did surprise to the downside. There's some signs already that these tariff costs are beginning to be transferred onto the final consumer. That didn't show up in PPI yesterday, but of course, inflation will continue to be a significant driver. Switching over, let's also take a look at how the oil complex is. And what we're seeing is a small upward performance in the price of Brent today. We're just trading shy of $69, up 0.3%. Similar for crude. This showing the market showing some stability in the last couple of days. Again, despite some of the geopolitical uncertainties that we continue to talk about and questions about the demand outlook that are coming through vis-a-vis these tariffs. Well, that was it for Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe. Tom McKenzie is back in the studio. This is Bloomberg.